Nikkei is down 2%, so that's a big fall that the Japanese market is seeing.
Inflation is coming down. And two is that the real economy continues to do well.
The market is forgetting that the terminal rate is going to be significantly higher than what we had in mind, let's say, back in November or beyond that.
For 2027, the vision for them is sales of anywhere between 4,000 to 4,500 crores.
Wholesale numbers are the highest ever November, actually. And this is the 6th consecutive month where we have seen the industry wholesale numbers more than 300,000.
As far as the India portfolio is concerned, is reduced the weight on Bajaj Finance and replaced that with SBI with 2% weight.
Windfall taxes on crude oil production, that is, it has been cut to 4,900 rupees per ton versus 10,200 rupees per ton.
The Nifty has opened up with a bit of a cut, with a cut of around 40 points.
Although we have made new highs in the market, everything is hunky-dory.
It has a potential of 100 million merchants and more than 500 million payment customers, and this opens an opportunity to cross-sell financial services and other business offerings.
Policy Bazaar, today in the block window saw a significant chunk of, the stake exchange hands. 5.1% stake is what exchange hands, a little over 1,000 crore was the value of this particular deal.
Market slightly off the lows, but still down 150 points.
Well, that was the day so far. You're with us here on Closing Bell, the last hour today and the last hour for the week as well. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi. The Nifty is under pressure. It has been under pressure from the morning, but mid-caps and small caps are doing just fine. You've got, those indices up in the green in stark contrast to what you're seeing on the index. So 100 points lower on the Nifty, that is 0.5%. But look at the outperformance in mid-caps and small caps. This is something we've been highlighting. This is something we said in the morning as well. Maybe the action really is in broader markets. As a consequence of this, overall market breadth actually is positive. It's actually been positive and it looks good. Autos, consumers and private banks are under pressure. Autos, of course, started down. It's only picked up momentum on the way down, and we'll talk about that in a bit. Metals are higher. And IT is not really participating. I mean, it's slightly weak, but metals are higher by about, the index itself is up 0.6%. And later today, we get one more data point, the last of the week. I guess the last big one before the FOMC meeting, which is less than 2 weeks out. That's the jobs number for the month of November. And this is an important one because as recently as 2 days back, you've had the Fed chair saying the labor market indicators perhaps the most important. Reema, hi.
Hi. So this week, the Nifty is up about 1%. The mid-cap index is a gain of 2.9%. And there has been a lot of rotation. You spoke about how, the automakers are under pressure. So Eicher Motors has lost about close to 2.5%. Maruti is another stock which is under pressure. On the gaining side, pull up the gainers this week itself, and you would see Reliance Industries has a rally of 4.5%. Britannia has been a big mover this week. Those are the moves. Tata Steel, Reliance. So that sectoral rotation continues. And a quick word about IT. Well, frontline IT week to date hasn't given you any return at all, right? Infi, HCL Tech are actually down this week, 0.1% lower, while TCS is a gain of 1%. But some of these mid-cap IT names have seen a lot of strength this week. Case in point, a Birla Soft is up 12% this week. L&T Technology up 10% this week. Persistent up another 9%. These are stocks which saw an unnatural huge move yesterday, and they followed it up with some buying today. So mid-cap IT continues to see a lot of action, Nigel.
Well, that's right, Reema, but you'll say that, why are you saying that it's a good day? I'll tell you what, the Nifty is down 100 points, but yet I'll say it's a very good trading session. And that is because the mid-cap and the small-cap indices, both of them are doing a relative outperformance. And that's something that we said earlier today as well. Irrespective of what the Nifty does, it could consolidate, pull back a couple of percentage points. But you'd like to see better participation from the broader market. And it seems that's the case. But on the Nifty itself, well, that appears we're in a bit of a range. Shall we break that? 18,800 call, that's the most active today. And the 18,700 put, well, that as well is fairly active in today's trading session. Earlier today, we went down low, went around 18,640 odd. And from there, we've seen a bit of a bounce. So the day's low becomes a bit of a support zone. And you have to buy this dip, right? So if you bought the dip earlier today, that should be your stop loss. And let's see how the final hour pans out. But otherwise, it continues to be an uptrending market and a buy on dips market, though we'll have to brace ourselves for some bit of a pullback at some point of time. Reema, back to you.
And we've got the RBI MPC meet next week. So the outcome will be known on 7th. So that's going to be an important domestic indicator. Currently, economists are penciling in close to about a 35 basis points rate hike. That will be a step down compared to the 50 basis points rate hikes that we've been seeing up until now. So while we will track the jobs data this week, tonight, next week, we've got the RBI monetary policy. But let's tell our viewers what we've lined up for them on the show today. Paytm gets a thumbs up after it reassures investors that the company is on the path to profitability. The management says it's confident of a break-even in terms of EBITDA by September next year. Policy Bazaar owner PB Fintech sees a block trade of 5% stake, likely sold by SoftBank. Another reason why the stock is in focus is the big question. Insurance is the other big sector that we will be tracking. Will Bima Sugam be a game changer for the industry? Interesting opinion from industry leaders coming up on Closing Bell. Westlife Food World is the other stock which is in focus as the management unveiled their vision for 2027. Key excerpts from our conversation with management coming up on the show. And finally, we'll be joined by our Alpha Manager for the day, Sandeep J. Shah of Motilal Oswal Private Wealth Management, to discuss his top portfolio bets.
All right, how should you position yourself in the last hour of trade? That's the question in front of us. Mitesh is with us to help us with that. Mitesh, hi. Good afternoon. Last hour as we begin, what would you want investors or traders to do? Because broader markets are in fine fettle. Nifty is a little weak.
Prashant, a couple of things. One, I think, earlier in the day, we talked about possibility of markets testing levels of 18,650, and that was the immediate support area. It kind of bounced back from 18,639. Now, while the bounce back has happened, the indicator setup isn't really positive or convincing for me to take a long trade here. So I think, what we're taking is that we're just holding on to a long position till today's low gets violated. And trading with stock-specific biases, what we have done is that booked some profits on the long position on the stock side as well. And we are also exploring some shorting opportunities. So even on the stock side, the balance of long and short is slightly, reduced from the long exposure side. So in that sense, slightly conservative kind of an approach because the market isn't showing signs of continuation on the upside. And therefore, it will be best to see if there is strength to see that continuation, or if we break 18,639, which is today's low, and then see some more pullback. With that, I have one buy and one sell right now. Actually, Motors, I think, was flagged off earlier in the show. It was clearly a case of a breakdown. So that's a sell with a stop about 33.70 for targets of 32.60. And also a buy on Coforge, which is done extremely well. That's a buy with a stop below levels of 41.60 for targets around 43.25.
Okay, all right. Thanks a lot for that, Mitesh. We'll keep coming back to you. By the way, just pull up the intraday chart of Suzlon. Last Friday, there was massive delivery, and the stock saw a big recovery. It's seen a bit of a follow-up today, and from the lows of the day, it's seen a sharp spike. Remember, it's still under 10 rupees stock. It's fallen from grace in the last few years, but it seems there is some delivery-based buying on this one. It's trading above the 200 DMA. So that explains why that stock is moving with traction. Talking about stocks that have actually fallen from grace or have seen a big correction from the peak, Paytm. That's one such stock that's, a third of what it was at its listing price. But the stock is higher today. Brokerages, some of them are quite bullish on the stock. Surbi joins us to run us through all of those details and the takeaways from their analyst meet. Surbi?
Hi, thanks for that. Paytm management hosted its first physical analyst meet here in Mumbai yesterday, wherein they have highlighted a large growth opportunity for the payments business in India. They have said it has a potential of 100 million merchants and more than 500 million payment customers, and this opens an opportunity to cross-sell financial services and other business offerings. They also provided some granular details on their key revenue drivers across business segments and the breakup of key costs, which will help them to achieve their adjusted EBITDA break-even target by FY24. Additionally, they said they don't see any significant regulation risk to affect its payments margin. The net payment margin should largely remain steady even if there is a reduction in MDR, which is the merchant discount rate. They said on credit cards, they have seen significant pickup in the business momentum. On commerce business, management disclosed that the GMV was close to 2,000 crores and the revenue was 130 crores. On profitability, management expects to become free cash flow positive in the next 12 to 18 months. On back of this, brokerages have released their reports. Goldman Sachs have a buy rating with a target price of 1,100 rupees. Morgan Stanley has a buy target with a target price of 695 rupees. CLSA again has a target price of 650. JM Financial has upgraded its rating from sell to a buy with a target price of 600 rupees.
Thanks a lot for that, Surbi. Well, Gurmeet Chadha, Managing Partner and CIO at Complete Circle, joins in. Hi, Gurmeet. Good afternoon. Well, discounts are something that excites everyone, right? It's human nature. But what about with regard to the stock market, and what about with regard to Paytm? You're getting this stock closer to around 500. The issue price is more than 2,000 rupees. Post what they're saying at the analyst meet, are you interested or not?
We would like to wait for some more time, Nigel. I think, but one good thing which they did was to give a lot of breakup on how they earn revenues, which I think improves the disclosure standards. So if you see, they've guided for September being EBITDA positive and free cash flows coming in next 18 months. I think what they also highlighted was how they are going to make money on payment business. So they gave a breakup that the blended margin is 8-9 bips, of which let's say 3 to 5 bips is from UPI. And 12 to 15 bips is from wallets and other devices and cards, etc. And then they also talked about how they earn through subscription on the devices which are installed, which I think is good to see. I think the market probably thought that this is completely loss making, although the margins are still low. Then they also gave the take rate for loans, which is pretty high, which is 2.5-3%. On collections, is between 0.5 to 1%. And then they gave about how many are active devices and all. So I think what I liked was the disclosure and breakup vertical wise. We'll see if there is progress, and in this market, I would be more keen on seeing cash in the bank account first before venturing out right now.
Okay, this is the week also when these new age tech companies made a bit of a comeback. So Paytm is up close to about 12% this week, 13% nearly. Zomato has gained 6.5% this week. Another one which is higher has been Policy Bazaar, a big 3.5% move over here. Gurmeet, over here we had the news that earlier today there was this big block deal of 5.1% equity changed hands, totally valued at close to about 1,000 crore. We understand that SoftBank is likely to have halved its stake. So they still hold some stake, but they had 10%. They've sold close to about 5%. Is this something which is going to be of interest to you? Because while we have sellers who are looking to offload their stake, there are willing buyers who are coming in, and the stocks are not slipping too much now.
Sure. No, this business in particular also, Rima, you saw some operational improvements. If you see the insurance premium collection, which is the mainstay, last quarter was 2,000 crores. Entire year, last year, they were able to do 4,000 or 5,000 crores, which means you probably did 50% of the year in one quarter. If you see Paisa Bazaar disbursements, they were also up to almost 5,000 crores. Right. So this entire fintech business of distributing loans, insurance, to put it in very simple manner, is about more and more offtake and then as a result working on the fees and the commissions you make on it. So if they can demonstrate that, I think at some point of time probably can be considered. But I would be more keen on insurance companies like the HDFC Life, which has been a bit of a range bound, been a bit of an underperformer. So the private insurers like ICICI, SBI have done well. They've changed the product mix very diligently. It's a nice mix of annuity, par and non-par now. Insurance in my view is a very structural story over next 5-10 years, considering the penetration levels we are in. And now we are seeing some improvement in persistency ratios also. Claims should come down post-COVID period. So I would look at more there for now and then let's say PB Fintech as of now.
Okay, so over PB Fintech, you would prefer the HDFC Lives and the SBI Lives of the world. Do listen in to this other important issue. It could be a big overhang as well for PB Fintech. That is IRDAI's effort to get Bima Sugam going. Earlier today, we had the IRDA chairman also calling it a potential UPI moment. Here is some more opinion that we got from HDFC Life CFO Neeraj Shah. Listen into what he had to say, and then Gurmeet, we would like your opinion as well.
We are very excited about this development. I think it is more power to the consumer, and it allows the manufacturers to get more access directly to customers, in addition to the distribution channels through which we come in touch with customers. So I think it's a great initiative in terms of bringing all the segments of onboarding, servicing, and claim settlement for customers in the manner of their choosing.
So, and by the way, we had other insurance companies, insurance veterans, Nilesh Sathe, etc., who weighed in on the matter. But in any case, I mean, prices have come off, and we're seeing some bounces in names like PB Fintech as well. The market otherwise is not doing very much at all on the index, but stocks, well, is a completely different matter. Gurmeet, auto OEMs, I mean, any thoughts here? Eicher is down a little bit, Mahindra is down a little bit, Maruti, Hero MotoCorp, I mean, that's the pack which is down between 2 and 3% today. Do you like anything here? Do you own anything already?
So, Prashant, we're being selective here. I think what you're seeing is, so you look at, for example, two-wheelers. I think probably second half of the year should be better, as we saw that in agriculture growth numbers in the GDP print we came, and there will be winter harvest. So if you look at, let's say, TVS, for example, they've done better than both Hero and Bajaj. So both on exports, on premiumization, on domestic offtake. In iQube, which is their, the EV, they're not clocking almost 10,000 units now monthly from December, and March, I think they will get to almost 26,000 units. So all parameters firing, better balance sheet, reduction of debt, etc. So, and markets have been pretty, generous to them vis-a-vis the other leaders of the market. Similarly, in OEMs, we are more keen on M&M right now. I think what we are seeing is back-to-back launches, premiumization happening. They're gaining the SUV share back, which at one point of time was 24-25% for them. There is an EV launch in Jan, so some bit of value unlocking should happen there. Maruti, I think if you see the wholesales of last month, their market share is still hovering around 41-42% despite the pickup. So if you see more improvement in market share with the new models they have, and then that reflecting in operating margins, which at one point of time used to be 16-17%, I think that's when probably a bigger re-rating will come. And then we're looking at some auto ancillaries, etc. So you've got to be selective in terms of seeing where the momentum is good, where earning visibility is better in this space.
By the way, particularly for Eicher Motors, which is one of the big drags today, down 3%, their export performance has been very weak. So Eicher Motors exports is a very small percentage of their overall sales. If their overall monthly sales is about 70,000, exports is 5,000. And that was the number which came in the month of November. But this 5,000 is the lowest in terms of the monthly sales this entire fiscal year. It's down 27% year on year. It's down 12% on a month-on-month basis. And just for reference, 5,000 of monthly sales this month, in the month of November, would compare with an average of 9,000 in the first half of the year. So exports is dragging for a lot of segments, not just Hero and Bajaj Auto, and we chatted with them, but even for Eicher Motors. It doesn't move the needle per se, as I said, because it's a small contributor, but the lowest monthly sales on the export front so far this fiscal year for Eicher Motors.
That Rima. Well, Gurmeet, I want to ask you about Piramal Pharma. A couple of months ago, or a little more than a month actually, the stock listed at around 200 rupees. It corrected around 125 rupees. From there, it's done a bit of a bounce. I think there's a bit of a battle out there whether or not the management will be able to go according to their guidance. They're talking about big margins of around 27 to around 25% odd in the next couple of years. Can they do 2,500 crores of EBITDA? That's the big question. It trades at around 8 times EV per EBITDA if that's the case. Your view on the pharma space, and if any view on Piramal Pharma?
Yeah, I mean, it's come off quite a bit. I think the demerger price was, 191, and I think at some point of time people were seeing value. I think if you see the business, Nigel, it's custom synthesis, which I think is almost second after Divi's in terms of the size of the custom synthesis business. Then there's the consumer health business, which they do very well, and then you have formulations, etc. My sense is that valuation-wise, obviously at this price, it's pretty reasonable. And if you take forward and their business is more, if I can call more cyclical than other, API CDMO names, because the second half of the year is typically where they probably do 65%, 70% of the revenue. So we are dipping into it. We are not really outrightly buying some of the pharma names. One thing I've learned over a long period of time is that only, when you have businesses like Divi's or Laurus, or when there's a lot of negativity around good businesses, history tells you that that's a better time to buy them. But my sense is you'll probably have another weak quarter in Jan. And a lot of the inventory, destocking, raw material prices, logistics, solvent prices, more for Divi's should start reversing probably in the middle of the year next year. So I think if you have a staggered approach and if you're willing to take maybe some short-term pain, I think the risk reward is pretty reasonable.
Risk reward reasonable for Divi's Laboratory. Gurmeet, do stay on. We need to slip into a break. On the other side, we'll also be joined by our Alpha manager for the day, Sandeep Shah of Motilal Oswal Private Wealth Management.
Welcome back. Well, the Nifty is still down. In fact, we have moved a little bit lower in the last few minutes. However, the traction that we are seeing is in the mid-cap space, and that's heartening. And you have more number of stocks advancing than declining. In fact, from the broader markets, one such stock that's moving pretty well is MOIL. Remember, it's been a rank underperformer in the last many years, but they put out a release, for the month of November, the operational release, and it looks pretty good, both on the sales as well as on the production front. Let's talk about the production front first. They're saying that they produced 1.2 lakh tons. In the month of November. And that's an increase of around 60% in comparison to what they did in October. But we track sales, right? And sales is looking even better. So in the month of November, the sales volumes is higher than the month of October by close to 82%. That's not all. They're saying for the remainder of this year, they're confident that, they are going to deliver in a better performance. So taking all of this, keeping all of this in the backdrop, well, the stock is doing well today. It's up close to around 4% odd, but it's come off the high point of the day. Gurmeet, MOIL, one of those companies that are owned by the government of India. Cash in its books, been a big underperformer. Any view on this stock or the metal space? It appears there's still a lot of pieces of the puzzle that need to be solved.
So you answered it, Nigel, in the latter half. In general, I have a slightly negative view on commodities in general. I think we are in for a sharper global economic slowdown than what is visible in the numbers right now, because the rates will remain high slightly for a longer period of time. And I think that will have a bearing on the commodity prices much more than what we've seen right now. So that's an avoid for now, unless you get a good tactical opportunity, in names like Hindalco or Tata Steel, where you take a tactical call, make some money out of it. So since we are largely on the fundamental side, it's an avoid as of now.
All right, Gurmeet, thank you very much. Have a good weekend. Appreciate you joining in, and see you next week. Thanks indeed. Let's welcome in Sandeep J. Shah. He's managing partner at Motilal Oswal Private Wealth Management. Sandeep, great to have you back on the show. Appreciate your time. Prashant this side. You basically are cautious, but you're saying stay invested. But fresh allocation into equities, perhaps wait a little bit, Sandeep. Is that the approach?
Well, just to put it in context, even in July this year, I had maintained that this was just what had happened was just a bull market correction. So I'm obviously delighted to see the market hitting new highs. And I have actually been continuously using this playbook of 2003, 2008, where we had seen 30% corrections and the market went on to make a new high. That's exactly what's happening now. And in the context that, unfortunately, of course, valuations are not as cheap as they were obviously in July, though valuations are still perhaps cheaper than they were saying October 21. It's not the time to go overweight on equities. At the same point of time, I think it's important to stay invested because the longer term bull market is still in place. And I think for fresh allocations, I think you've got to stagger your approach, but stick to your asset allocation or buy the dips. If you look at, market cap to GDP is about 110%. That's below the peak of 140%. Of course, we're seeing far larger companies getting listed now. If you look at it on a trailing P and a price to book basis, we're about 10% higher than the long-term average. If you look at the 12-month forward P, and we've actually upgraded estimates post last earnings quarter results, 12-month forward P is about 6% higher. So that's not significantly expensive, but it's at the same point of time, not the time that you actually go overweight on equities. So, longer term, we're still, of course, still on track to become a $5 trillion economy by, say, 2027. Exports are expected to go threefold by the end of this decade. Share of exports should double to 4.5%. And, the capex cycle seems to have begun. So you're seeing capital express both on the public side, on the private side, as well as households, of course, more of real estate. So it looks like we're definitely, the new business cycle has improved. Credit growth at a multi-year high, 17%. So we are seeing revival in real estate, which is a very important sector. And auto, which had again gone through long periods of slump. So you should see a lot of trickle-down effect as well from all of this in building materials and all of that, consumer discretionary. And, corporate balance sheets remain clean and robust, and banking should actually is well capitalized to actually help India grow as well.
Sandeep, afternoon. So what you're saying is that it's a good idea for you to continue with your SIPs. But most of us have a fixed SIP, right? We can't incrementally allocate more money. So within the money that I have, which is being allocated to SIPs right now, what is the best mix? How much should go to your blue chip funds? Should I increase my allocation now to small caps and mid caps? Because that's where perhaps the alpha could be generated. Should I be allocating incremental amount for IT now, which I haven't been so far, perhaps over the last 12 months, given its underperformance? Just tell us, what's the best way to construct your SIP now?
Yeah, that's a good question. I think that, if you were to look at, it also, of course, has to depend on your risk appetite, in the sense that more importantly, your ability to handle volatility, right? I think that is a very important thing. But keeping that in perspective, I think both large caps and small caps are looking more attractive than mid caps. And the small cap index is still about 18-20% below its high. So in that sense, it would appear that there could be some room there. But I mean, of course, it's very important to remember that small caps will always be more volatile, and the first sign of a correction, they will correct more. But so broadly, I think I would still prefer to go in for multi-cap funds. We've seen that, over a 3-year rolling returns, if you compare multi-cap funds with large cap funds, what we've seen is typically that the drawdowns tend to be similar over 3-year rolling periods, but the upside can be much more. So for multi-cap funds, and then balance it out with small cap funds if you have the appetite for that. And but yes, don't stop your systematic investments. If the market dips, then you can even add, increase the size.
Makes sense, Sandeep. Good afternoon. The domestic story is looking up in comparison to what's going on in the globe. And if that's the case, then cement consumption will go up. But you're not too bullish on cement. Give us the reason why.
Oh, I'm absolutely bullish on cement demand. No question about that. I was just talking about how the real estate sector is going to lead to a lot of demand and all of that. Of course, so, the point is that you are going to see housing demand. There is an thrust on infrastructure. We should be hoping for a recovery on the rural side. However, that's only one part of the picture, right? I mean, ideally, you want to be in a sector where you have both engines firing for you, where you see demand growth and where supply is you're not concerned that supply may be excessive. And, this is the first time that we've seen a very ambitious player actually come there. And post this entry, we've already seen some of the biggies announce expansion. So while it's possible that, sanity may prevail and you might not see any serious price undercutting, but, investing is really about trying to find where the odds are stacked in your favor, right? It's not about, unless you're a trader, a trader could still well be nimble and it looks like, short-term cement prices may bounce back, but you may trade. But if you're an investor, you want something where the odds are significantly stacked in your favor. Or where things are very, very clear to you, and it's very easy to take an investment call, right? The best investments are usually the simplest and the easiest to figure out. And this one, unfortunately, is not so simple. So, you've really got to hope that the producers will maintain pricing discipline and they will not go in for undue capacity expansion. And that's not an easy call to make. So therefore, I'm staying out.
Sandeep, you were recommending some opportunistic ideas in retail and energy. Could you elaborate a little bit more?
So, we've started seeing that in some cases, as far as retailers are concerned, we've started seeing that some of them sales have gone back beyond the pre-COVID highs. Of course, on the value side, there's still a lot of problem, right? On the value retailing side, it's still significantly below pre-COVID levels. So, as we should, as the economic growth continues to build up, I think discretionary consumption will continue to pick up. And I think that, so to that extent, I think there is a fair amount of possibility there. On the energy side, of course, you have to be a little more selective. And here I'm talking more about green energy and looking for good ways to play that and ancillary ways to play that. So, and in case where you find that, some of the existing power producers have a very strong green play, which is not fully factored in. I think that's the kind of play. So I'm not really suggesting that you go in for the conventional energy plays here, but it's really about, and India is clearly making the transition to green energy. And so looking for plays actually to participate in that.
Sandeep, IT services, I mean, what's the view, and you think makes sense to buy a IT fund, a tech fund?
Oh, certainly, I think that as far as tech is concerned, while we are obviously, some of the companies have spoken about some slowdown in specific pockets. But if you were to look beyond that, I mean, if you were to see that their order books are still quite good, you should see significant, margins should bounce back pretty strongly because a lot of the freshers they've hired will become productive. A lot of their subcontracting costs should come off. I think as of now, demand is still reasonably good. It's of course tapered off a little, but valuations are still very reasonable. They generate huge amount of cash. You have a lot of very good quality companies with great corporate governance. You have return cash flow comparable to some very good consumer companies, but valuations of course significantly lower. So yes, absolutely. I think tech is something that I think you should have in your portfolio.
Sandeep, what about insurance companies? And particularly if you have a view on LIC, a lot of fanfare, a lot of, weight was there when it was coming to the markets. It came and it wasn't a very pleasant surprise actually for a lot of those who got those shares. But now it seems there's a bit of an opportunity ahead. Your take on it at current valuations?
So insurance, has been looking like, a great sector to be in for a while now, right? There's a huge amount of under-penetration and financialization of savings and all of that. And we have some very good companies there as well. Unfortunately, there's always been some, some factors which have actually come in the way of actually significant growth. You would have thought that COVID would have led to a lot of people going ahead and actually wanting to insure themselves, especially their lives. But we discovered that growth didn't happen then because, insurance is a product that needs to be sold. You need a lot of counseling there and advice in terms of selling it. So a longer term, of course, remain positive on insurance. It will be difficult not to be bullish on India and India's financial sector and not be bullish on insurance. But, it's not been such a clean and clear story. So look for corrections, look for dips there, look to buy the leaders there. I think the market, for some of the newly listed PSUs, I think the market wants to see demonstration of performance and see that, that they're able to at least regain some market share and see some clawback to profitability. Some of these PSU insurance have had very high participating policies which have affected their embedded value. So a lot of promises have been made about transition in their business model. So I think investors want to see that come through before they actually start paying significant returns. But, any company that is able to hold on to their market share, whether it's a PSU, even if it's a PSU, I think should merit attention.
All right, Sandeep, we'll leave it there. Thank you very much for your time. Great speaking with you. It's a pleasure, as always, having you with us here on CNBC-TV18. We'll take a quick break here with news that the market is down by about 130 points. But, no despair at all because broader markets are doing just fine. They're still up more than 0.6%, mid-caps and small-caps both. We'll take that break. We're back. We'll tell you what's happening in dealing rooms with, of course, D Street Chatter. That's coming up with Nimish. And buy today, sell tomorrow calls with our experts in a bit from now.
Welcome back. Just the last 30 minutes or so, and then you could be off to the weekend. In fact, don't miss our editors roundtable later this evening. But for the time being, let's get in Nimish. We're wondering what's going on today. Broader markets performing. The Nifty is under pressure. Nimish, tell us, what are you picking up? What's the dope you're getting from dealing rooms?
Well, Nigel, looks like it's a bit of a weekend factor as well. Heading into a weekend. So Friday factor, so to speak, is playing out. A bit of profit booking as well, some bit of exhaustion as well from the large institutions. Remember, we saw a huge number on Wednesday because of the MSCI. Since then, it's tapered off a bit. So that seems to be the day today as well. While the Nifty is down 100 points, the feedback is the flows are not that bad. So they are positive from the larger FI. So that's the overall feedback what I've got. I guess the sector chain continues. So every now and then you see new sectors joining in. Today seems to be there for NBFC sector. The entire NBFC space is buzzing in trade today. While there's a bit of profit booking, the auto names which have been the big outperformers this week. So the churn continues within the larger institutions is what I understand as far as the flows are concerned. technically, while we are in the zone where the markets are expected to go up further, maybe for the few days you might see a bit of consolidation and a bit of profit booking. So 18,300 is a level to watch on the downside. That seems to be a big support level as far as technical levels are concerned. But broadly, the sense is maybe this is a weekend factor, and you're seeing a bit of profit booking. But the momentum is still with the bulls. And for today, the feedback is while the Nifty looks a bit weak, there is buy figures largely from the FIs.
Well, we're looking forward to the weekend, right? Namesh, going to have a good rest, and then last few weekends, and we are off for New Year. But what about individual stocks? What are you picking up?
So in terms of individual names, the first stock is AB Capital. It gels with the entire theme of NBFCs doing well today, and AB Capital stands out. Big volume in that stock. In fact, for the last 1.5 months, that stock has been buzzing off late, and I believe some large HNI investors are quite active and are very bullish in buying that stock. So hence, you're seeing a big move in that particular stock today. The second stock is Macrotech Developers. While Chris Wood did add macro developers today to the Asia Pacific list, and we had the strong management commentary as well. But the other important factor is in Macrotech, one of the leading FI who was a seller in the stock, that selling seems to be over now, and hence you're seeing a big up move in that stock today. The third stock is Persistent. Within the technology name, that stock has relatively outperformed. This week the stock is up 10%, and I believe one of the leading long-only funds seems to be quite actively buying in that stock, and hence a big move this week and in today's trade as well. And the last stock is Excite. Purely from a flow point of view, that stock stands out today. So the volumes are expected to be on higher side, and I believe some domestic mutual funds and a few FIs are actively looking to buy Excite, and hence that stock is buzzing and some good volumes as well.
All right, Nimesh, thanks very much for that. So that's an interesting list as always to watch out for. Now, as Nigel pointed out, on Editors Roundtable later at 4:30 p.m. today, we've got some interesting things set up. So let me give you a quick preview of what the lineup will be like. So we'll shine the spotlight on platform companies which are in focus, where we've seen some marquee investors selling big stakes, but the stocks have held on pretty nicely, and Nimesh will kind of detail that out for us. I will put out a piece on what these stocks have done vis-a-vis global peers, a valuation comparison after all of the fall. It's not just stocks here which have fallen, globally as well. Stocks have come off quite a bit. So that is something which is going to be the focus. The new age stocks, I mean, last 2 weeks or so, they've been, as far as conversations go, right on the top up there. Rima.
And Q2 earnings season appeared to be steady, but there are some signs of caution which are emerging. And finally, the other big theme. We saw the consolidation take place in the aviation sector for the Tata Group. What are the other standalone independent subsidiaries which operate and fish in the same waters? So we'll talk about the Tata Group and the other possible consolidation options. So don't forget to tune in to CNBC TV18 at 4:30 p.m. today.
Okay, so that's coming up in about, an hour and 20 minutes or so from now. Mitesh Thakkar is with us to tell us what to buy or sell today for a reverse trade tomorrow. We're down 114. Mitesh, fresh trades?
Prashant, have a BTST and Grasim. I think that was a call earlier in the day as well, but now, breaking above the previous highs and closing at all-time high levels. So that's a BTST with a stop below 1810 for targets of 1840. And an STVT on HDFC Limited, which is, closing with some kind of negative chart setup. Recommend STVT here with a stop at about 2680 for targets of around 2640.
Mitesh, thank you very much for that. The other stock which is in focus is Westlife Food World. The management unveiled its 2027 strategy yesterday. The McDonald's operator hopes to take sales up to 4,000 to 4,500 crores by 2027. Shilpa Ranipeta caught up with Akshay Jatia, the executive director of Westlife Food World, and began by asking them in detail about their sales target for the upcoming financial year. Listen in.
So in terms of Vision 2027, our entire endeavor is to double sales. Right. When we put it all together, our entire vision was to double sales and do that on the back of growing AUV. Mm-hmm. So it all revolves around growing our meal relevance, our omni-channel strategy, and I think that's working out very well. So we're pretty confident to achieve this. In terms of the current FY, we've had a couple of strong quarters behind us. We're seeing momentum continue, and we're hoping to, deliver on the Vision 2022 by the end of the year, which means crossing the 2,000 crore run rate.
Right. And talking about the AUV also, just run us through again what the targets are and also what will drive this AUV for you.
So in terms of AUV, our targets are to grow it over our base of existing stores as well as our new stores. So we're planning to open roughly around 300 restaurants over the next 5 years. So our current base of stores will grow AUV a little faster. The newer stores take a little longer. So it comes down eventually to SSG and total sales. So our target is to double sales, while growing the current 63 million rupees of AUV across the system.
Right. And talking about the store expansion also, you did say that expanding in the South will be one main target. Can you run me through what the contribution of stores from the South is currently, what the mix is, versus West versus South, and by 2027, what do you see this mix as being? Also, if you can touch upon your expansion in smaller towns as well.
So in terms of the South, I think the split is roughly around 40 to 45% of our stores are in the South. We've maintained the pace of opening stores there despite it being a region, where brand relevance and product market fit has taken a little longer.
Right.
Today we feel we've reached that cusp and we've established it quite well. In terms of moving forward, I think we said around 50% of our stores will be in the South. So I think by the end of 2027, you should see a split that's closer to maybe 45 to 50% in the South. And we're going to continue to grow our market leadership in the West as we always have. In terms of small and emerging towns, like I said, we've had very promising results because of the rapid urbanization growth, which has given us good momentum. We've got good case studies in terms of stores performing almost 40% higher than the system average. So moving forward, again, it's going to be a focus where maybe around 50 to 60% of our new stores will be in such towns. And it's making McDonald's a destination there that's really working for us.
Interesting conversation there, but let's talk about the markets. 15 minutes to go before we wrap up the day's trade and the week's trade. Right now, as we speak, we're down 120 points, seeing some profit booking after 8 days of run. Siddharth Bhambre, the research head at Religare Broking, now joins us. Siddharth, everyone that we've spoken to over the last 1 week has said that perhaps the value is going to be generated outside of the large caps. Small caps, where the index is still about 18-20% away from its lifetime high levels. Any interesting ideas that you have for us in the small cap space?
Definitely, man. So, I tend to slightly disagree with that opinion because had that been the case, this market has given enough, time and, support to broader market to do well. I just want to, make a small comparison between what has happened in June and till date. So we were, in doldrums, we were around 15,000, 15,500, negativity around dollar index around 150, crude around $115 index also was quite high. And there was too much of negativity. And that is the time between that June-July period, we were very optimistic on market because all these negativity and short positions in market would have given a decent, support to this market. Now, in case of India, we were also seeing that there was good amount of growth, there was good amount of corporate earnings support, and that's the reason market was buy. Now, at this juncture, Rima, at 20% higher from what we were at June, and most of the factors now turning positive, and not that corporate earnings were like too good for market to justify this valuation. We are not very optimistic on market from 3 months perspective. Now, why I am saying that? Because mid-cap rallies, they don't, sustain for a very long period of time. They come for 1-2 months and they fizzle out. So this is not a time to, get into something which has not moved despite, market going up by 20%. So my take on your, question is that I would avoid getting into small cap, mid caps only because they have not moved. Our comfort on market at these higher levels is not there. I understand the larger picture remains same, nothing has changed, but valuations and some of the important parameters have changed, which are making us a bit uncomfortable in market. So I won't enter into mid-cap.
Okay, all right. Hi, Sid. Good afternoon. So you'll rather prefer the large cap names than the mid-cap names. Got that. But what about a couple of sectors then? The pharma space, that's been a rank underperformer, not for this year, but if you take a look at it, say the last 5-6 year perspective, it's not moved much, while the index has rocketed. Any view on this sector? And any of these stocks you like, maybe a Lotus Labs, Divi's, some of them have come off substantially from the top.
Well, I won't be able to talk stock specific in pharma because we don't cover, that space very closely. But all I can say, Nigel, that the game in pharma has changed. You can't expect the kind of performance of yesteryears in pharma where, the entire sector used to start and do really well, because that was the time when it was under a different scenario altogether. Now, pharma space, because of the generic thing, has become more of a commodity play rather than, API or IP play. So I would, refrain from getting carried away by some of these moves happening in these laggards and try to, catch them, be it, from fundamental perspective or from 3 to 6 months perspective. So I'll stay away from pharma.
Okay, Siddharth, coming back to you, that's an interesting view. Do get into what is done well, and because the overall view in the market is not too comforting, because small caps, mid caps have not participated, no reason to get into those kind of names. So that's Siddharth Bhamre's broad view at this point. For now, though, that is today and this week, these segments have been doing well. But as I said, we'll come back to Siddharth in a bit. But listening to some interesting conversation, my colleague Ritu Singh caught up with Ajay Bijli, Chairman and Managing Director of PVR. She began by asking him on what kind of screen addition they're looking at for the remaining part of the financial year. And of course, we also talk about overall demand conditions, how's business doing. Listen.
There's a retail boom also happening. New shopping centers, new retailers are also making their retail format more and more experiential. Yeah. So we just are joined at the hip with that revolution.
So you said about 60 odd screens launched in the first half of this year. We'll see around 40 more to make it around 100 in the second half?
Yes. 100, we are on track for 100. And that's the kind of screen addition we will be having every year.
Okay. Yeah. What were the footfalls? The second quarter was a bit of a disappointment. The third quarter, is there any improvement there? What about the F&B spends as well?
Yeah, second quarter was disappointing, but third quarter again is doing well. We've had movies like Wakanda. We had this Drishyam 2 has done well. Bhedia has come. Action Hero got released today. The big one Avatar is coming, and there's another one called Circus starring Ranveer. So the first 2 months have been very good, and then we've got now December where Avatar 2, whatever little we've heard, it probably will be the biggest opening of a Hollywood movie in India.
Will the second half be significantly better though? Because we've not seen big hits coming in from Bollywood in the first half of this year. Will the second half be much better, you think?
Well, to be honest, I don't know what you mean by big and small, because Brahmastra was very big. It was almost 270 crores of revenues. Bhool Bhulaiya, Kashmir Files, Gangu Bhai, these are all first half. Vikram Veda. All these movies have done over 100 crores of business. Some have done more than 200 crores of business. So those are big hits. Hollywood has done well. South, of course, has done better. But these are all temporary things. We just opened 8 months ago after the COVID. So I think people are drawing conclusions very soon, like they did with Virat Kohli and Sachin Tendulkar. So I draw parallels with what happens to these superstars of cricket and what happens to the superstars of Indian cinema, where even if they don't give one hit, suddenly people start panicking, and which is okay, because that just shows the passion of the Indian audiences. But I think it's too early to write off anybody, and it's too early to draw any conclusions, because we've just opened.
What about the spend per head trajectory in this environment, in the high inflationary environment? Is that getting impacted, especially in the tier 2, tier 3 cities?
No, it's all on track. Let's not forget we were shut for almost 2 years. So we're comparing everything from 2019-20 to 2022-23. And from their point of view, everything is up.
All right. And finally, your merger with Inox is underway. What are sort of the next steps? What are the timelines you're looking at, integration and the completion of the merger?
Well, a lot is, depends on the regulatory environment, or approvals rather. But the main approvals of NSE, BSE, individual NCLT have come. And I think there is another one happening on the 15th of December, unless a date again gets shifted. So it'll take its due course, but maybe a month maximum, or maybe 45 days, fingers crossed, the merger should get completed.
On that note, we'll slip into a break. We'll come back with more on the markets. Welcome back. We've popped our head above that 18,700 mark. IT started to do pretty well. So TCS is trying to recover from the day's low. HCL Tech is now back in the green. Tech Mahindra has seen steady buying after the early morning dip. So as you can see, the bottom on Nifty IT was closer to 12 o'clock. And since then, some buying has emerged. A couple of the other big movers in the last few minutes include L&T, Bharti Airtel, which is now up close to about 0.2%, and SBI Life 2 higher. Along with that, add an Axis Bank as well. We've got a few minutes left for market closing, so let's get you some important opinion, and that's about the US and the India macros. Earlier today, we had a chat with Jahangir Aziz of JP Morgan to understand his expectations on Fed, inflation, and the Indian markets. Listen in.
Our concern is that maybe inflation is so entrenched and the labor market does not break soon enough so that that additional disinflation that is required to take it down to comfort levels of 2-3%, that doesn't happen. And the Fed is forced to start rehiking aggressively in the second half of the year. And we have about a 25% odd probability to that scenario. So yeah, I mean, there is a scenario out there where things work out this way, but not that, the terminal rate keeps on going. The terminal rate is taken to 5.25. You go for a pause, and then you're forced to rehike. Rupee's problem has, very little to do with the dollar. Rupee's problem has to do with the fact that India is running a very large current account deficit, is running a very large fiscal deficit. It has inflation still around 6-7%, and it is providing almost no compensation for that macro risk. So I know that you keep talking about, how the FIs haven't moved in either in the equity or in the bond space, but there's a reason why the FIs haven't moved in. There is a massive macro risk on India, and there is very little compensation either in the high equity valuation or in the high bond valuation or on the high FX valuation.
Jahangir was particularly sounding dire this morning, right?
Yes.
And of course, I mean, by the macro risk, what Jahangir was referring to was, of course, the current account deficit, which is very high. His point is interest rates are not high enough here to reflect that risk. Siddharth is, of course, with us. By the way, Policy Bazaar is seeing a bit of a spike. I mean, from 475 or so, it's moved up to basically moved up 10 rupees in the last 10 minutes or so. So that's the stock's back up about 5%. After losing the early gains that we saw. So anything that looks interesting? I mean, broader markets, mid cap, small. I know I know your broad view, but what looks interesting? Unmute yourself, Siddharth. Siddharth, you'll have to unmute yourself. Sorry, we can't hear you. No, I think we've lost that line. We'll just try and fix that, Siddharth, and come back to you. But we'll fix that. By the way, the market also has come up. We're down 100 points still, but from the lows of the day, the market has come back nicely. I mean, the low was made early in the session. Actually, made afternoon 12 or so was the low, and that was what about 18,640. We're about 60 points off the lows of the day. So with this rate, with 2 minutes to close, I guess we will end with, a triple-digit gain, but just 100 points. Let's start wrapping up things. Siddharth, thank you for joining us. If you can hear me, we'll have you back another time. Thanks indeed. So what did we have? I mean, broader markets did just fine. Mid-caps and small caps, that's been the story from the word go. Sectorally, real estate stood out with a 1% gain. And what else? You had the metals space, which was up about 0.5% or so. So real estate and metals. On the downside, autos from the word go were weak. The index ends down about 1.25%. And I think you got the FMCG index, which ends lower as well. Stock specific, Eicher Motors, Tata Consumer, Mahindra, Hero MotoCorp were the top losers. And Apollo Hospitals, Tech Mahindra and Grasim were the 1% plus gainers that we had. Prima, broader markets.
Well, the broader markets outperformed. The index was up 0.8% for the day. For the week, it was up 3%. The advanced decline ratio is steady. 3 stocks in the green for 2 in the red. The big movers include Aditya Birla Capital, 4% up today, 12 for the week. Good volumes, M&M Financial, Manappuram, Muthoot Finance. So some of these NBFCs saw buying. IT has had a very solid week. Names like Coforge, L&T Technology, Birlasoft, these are stocks which have seen rallies of about 10 to 12% for the entire week. Strong buying. Polycab, one of the recommendations of Mitesh as a technical buy, also did pretty well. On the losing side, auto names were subdued. So in the frontline pack, as Prashant pointed out, Eicher, M&M, Hero weak, but even Ashok Leyland lost close to about 1.5%. And Escorts, Kubota too, not listed, but the stock was down close to about 1.5%. We finally end the week with a gain of close to about 18,700. It was a day of profit booking, a bit of a pause after the relentless rally that we've seen on the benchmark indices over the last couple of days. 18,700 in the Nifty, down 100 points for the day, but the mid-caps continued to shine. With that, it's a wrap on Closing Bell, but don't go anywhere. Our Friday special Smart Money comes up next.